QuickBooks Online 2025 1099 reports. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are online in our browser searching for that QuickBooks Online test drive, the free sample company file available to everybody, looking for the result that has Intuit.com in the URL because Intuit is the owner of QuickBooks. We're going to be choosing the United States version of the software. We will verify that we are not a robot, so they let us in the door. Otherwise, they shut that door on our robot face, which isn't good because if you break your nose and you're a robot, then it's like a light bulb that shatters, and those are hard to replace if you're a robot. So that's not nice to have the door slammed on your nose. My nose is more fragile even than a human nose if I was anyway. We're going to open up the reports. The reports are located on the left-hand side. And let's open up those major financial statement reports, balance sheet, and the income statement. Right-clicking on the balance sheet to open a link in a new tab. Right-clicking on the profit and loss to open a link in a new tab. Go into the tab to the right, closing the hamburger, changing the range. We've been using that 2-year time frame, 010124 tab 123125. Dropping it down to see it in years so that when we run it, which will refresh it, we see 24 and 25 side by side. Let's then go to the next report on the right side, closing the hamburger and repeating the process, going from 010124 tab 123125, selecting the drop down to see it in years, run it because we want to refresh it. So we're in 2024, 2025. We now have been looking at other reports that are going to give us more information about the balance sheet and the income statement. We're going to look this time at 1099 type of reports and then dive into a little bit about how you are going to deal with this 1099 situation, which is only really a situation if you're in the United States. The 1099 reporting being a little bit different because it's dealing with rules and regulations with regards to the tax code. So this is a good time for us to point out that the double entry accounting system is universal. So you're going to have different currencies that you will deal with, but the concepts will basically be the same for the cycles and the way the double entry accounting system works and the creation of the financial statements. Where things differ is where the laws and regulations differ, and generally the biggest differences are due to tax regulations that have an impact on our bookkeeping. In the United States, we have the major federal tax, which is going to be the income tax type of system. That's how they get most of their money that they then spend in frivolous ways, but they're cracking down on that stuff now. I am so impressed. So impressed. They're just cracking down like, man. Anyway, and then you've got the states that can tax as they choose possibly, so they might have an income tax and or some type of consumption tax, such as a sales tax type of scenario. So if you're looking at the federal government, then it's useful just to think from the perspective of the federal government as though they're trying to control you, which governments typically want to do. So if you're the federal government, they want your money, they want to collect income taxes so they can spend it frivolously until the Doge goes in there and holds them to account. For crying out loud, it's amazing. But usually they want your money, right? So what are they going to do? They're going to want you as a business owner to line up the people that work for you as employees. And then what are they going to do? They're going to say, hey, look, we want you not only to report to us the income of the employees, but withhold the money from them. And why could they do that? Why would they have the leverage to force us to withhold the money from the employees to pay their taxes? Because we want a deduction for the wages expense. So there's the leverage. Government says, you want a deduction for wages expense? We say, yeah, that'll lower my taxes a lot. They say, okay, well, we want you to tell us who you gave the money to. Not only that, but take their taxes from their paycheck before they even touch it and give it to us on their behalf. So that's the number one thing that you would expect the IRS to want, an employee-employer type of relationship. What if they're not an employer-employee type of relationship? well, then the IRS is still going to want the information because they still want to go after the revenue side of things and make sure nobody is under the table. And so who might be under the table? Is Edison a large company, or the telephone company a large company, and so on and so forth? Entertainment companies, news companies, are they under the table? No. And most likely with those large companies that are incorporated, the government already has their hooks in them. They might even be colluding with them until Doge goes in there and breaks them up. Okay, we've heard enough about but so that they're not really concerned with them. They're concerned with the little guy, the little contractor that is not incorporated, who might go under the table, not report their income. So the IRS is going to say, okay, if you have these contractors, we would like them to be an employee so we can force you to collect the taxes on our behalf. But if they're not, we want you to at least give us a 1099 ratting them out that they got money so that we can go after them ourselves if we can't force you to go after them, right? That's going to be the general idea. That's where the 1099 reports come into play. So they're not really reports that are like normal type of reports from the perspective of the balance sheet. They're not going to tie in specifically to a account that is on the balance sheet or the income statement like the other types of reports, but they can kind of be thought of as similar to reports that are dealing with the accounts payable or to the expenses. Because obviously if we're paying money to a contractor, an unincorporated but non-employee person, then we're usually doing it in order to pay for usually services, but possibly goods or services that would then be recorded on the expense side of things. So if I go to the first tab here and we go down to our reports, and let's say we typed in up top just to see 1099 reports. We've got the transaction detail report, the contractor balance summary report, and the contractor balance detail reports. So the contractors are one term that we might call somebody who is somebody that we're paying but do not have an employee-employer relationship. They're not our employee and they are not incorporated typically. But usually when we're dealing with the 1099 information, we might more likely be going down here now to the taxes tab. And within the taxes tab, we've got the 1099 filing if you're in the United States. So if I close this up, it says here, this is for 2024 up top on the drop down. Let's review your receipts and prepare 1099s. We can help out during 1099 season or even handle it for you from collecting the W-9 info to mailing the 1099. Here's every step of the way. So let's give a quick kind of recap of this. So now we're saying we need to then get information from the contractors who are not employees but are also not incorporated. How do we do that? Well, if they were employees, we usually have to give them a W-4 form. We ask them to fill out in some way kind of a W-4 form, giving us the information so that we can properly, do the withholdings and whatnot for them as an employee. If they're not an employee, then we might request the 1099 information with a W-9 form. Now note, the 1099 information is usually a lot less information, right? We don't need to know their marital status typically or how many dependents they have and this kind of thing. What we need to know is who are they, what's their number, and what's their address. Because from the IRS's perspective, that's what they would need to go after them, right? So if the IRS is going to go after them for the income, what do they need to know? They need to know their name. They need to know their number, because from the government's perspective, you are a number. And then they're going to need to know where you live, right? So that's typically the information that you would think that you would want to get for the W-9 in order for you to then prepare the 1099s, the 1099 type of reports. Then what we need to do is go through our vendor list and identify all those that need 1099 reports so that the system can then pull those people out to mark them as people we got to send a 1099 to. So, and that will allow us to generate our reports. Once we do that, once we've tagged the vendors as needing a 1099 and entered the necessary information to populate the 1099s, how much we paid them, who they are, what's their social security number or ID number, and where they live, then we have the information to create the forms, which we can then do either by possibly getting the forms externally and filling that information out, or possibly by doing it within the QuickBooks system using their data input form. So if everything was in there properly, then we can then go in and prepare the 1099s here. So if we click on Prepare 1099s, it says Fast Track your 1099s with auto file forms. We scan your books to identify receipts, relevant payments, and the right 1099 boxes. No manual prep required. Obviously, you still need to get that information into the system so it can possibly and properly identify who you need to issue a 1099 form to. Forms are ready for your review, update as needed. We e-file federal and state and mail copies to recipients. So you have the try it here. Pay only when you e-file. So obviously this is an add-on type of feature. If you wanted to do it through here, you're typically going to have to pay some kind of payment for them, because the filing of the forms usually isn't that difficult for small businesses, because you might not have too many 1099s you have to file, but you either have to get the forms and pay for the forms, basically, so that you can populate them manually through the reports that you have within the system, or you pay for it within here. You would expect that just paying for the reports or the forms themselves might be a little bit cheaper, but then you have the manual labor with it. So the more you e-file, the more you save. So let QuickBooks prepare forms, and they have the pricing thing. See how they compare. So easy file and tracking, and then they have the comparison thing. So you can see how exactly you want to comply with the 1099. Do you want to go through their add-on process to process the forms, noting that processing 1099 forms is way easier than if you had to process the W-2 forms if they were an employee. So let's close this out, and just one more look over here. If I open up the hamburger and we go into the expenses area, then we can then go to our vendors. And what we would want to do is go through our vendor list, which we might go through here, or possibly generate a report of the vendor list, because of that, and then try to identify which of these vendors we need to add or issue a W-9 form for, so that we can get the information necessary to populate them as a contractor. So let's just imagine we went into Bob's Burger and we said that we have to add them and issue them a 1099. We can edit them then, and we'd have to enter their data. We would need then the information for them, possibly email, phone number, but at the least we would need their address, and we would need their ID number, which if they were incorporated might be an EIN number, employer identification number, or possibly if they're a sole proprietor, then a social security number. Now, this is something just as a general rule, if you're doing business with contractors, if they give you just their social security number, or if they're not incorporated or they don't have an EIN number, they don't necessarily need to be incorporated. They don't need to be even an LLC or an S corporation to have an EIN number. They don't even need any employees to have an EIN number. So oftentimes, you can kind of see how dedicated someone is, possibly a little bit to some extent, by whether or not they at least have an EIN number, an employee identification number. Otherwise, you have to get their social security number if you have to file them as a contractor, which is something that you don't typically want to hand out. And even if, like I say, even if they don't have any employees and are not incorporated, they might want to get an EIN number, because it should be easy to do and the thing that you can give out, so that people can issue you then the 1099 form. So here it is, the 1099 information. So either the 95 or whatever, if it was an ID number, and then we're going to track the 1099. So we're going to check that off. That's how the system will know that we're going to be issuing the 1099s. So then I can say, all right, let's save that. And then now they're basically a contractor. So that if I go to the tab to the right, contractors, which we're basically defining here as people we have to issue a 1099 to, those that are not employees but are also not incorporated, and so on and so forth. So we have this one. There's missing information because we didn't put all of the information for their address and whatnot in it. And then we've got the view 1099 filings, prepare 1099s, and add a contractor or pay the contractors from your contractors tab. So we could use this to manage the contractor information. Now, if I go to prepare 1099, it's going to bounce me back over, in essence, to this tab down here, our taxes tab. Now, you could try to just generate a 1099 report that's going to give you the payments that you've paid out to the people that you have to issue a 1099 for, and then possibly use other software or some other way to purchase the forms possibly in order to process the forms. The IRS is wanting more and more the 1099s. You might have to do them electronically in some way, shape, or form, but it should be a lot easier to do than the W-2 forms. Now, if you're going to use some external software, then you'd still want to be populating and identifying those that you have to issue a 1099 for, and then you might generate your reports. The reports should be then populated. So you could go to like a 1099, and if I go into a 1099, let's go to a 1099 summary, contractor balance summary, let's say, and let's do it for 2025. So we'll say, or there we have all dates run. So then we have the information paid here. If I do the custom date range going from 01/01/25 to 12/31/25, run the report, and then hopefully that gives us the payments that we had, within the current period. So we would need, again, what does the IRS need minimum? You would think they would need how much you paid them so they can go after them for that income. They're going to need to identify them, name tied to a proper identification number, EIN number, or if not, their social security number, and they need to know where they live or where their business is so they can go after them with those massive increase in federal agents, IRS agents that they got from what was that bill? The Inflation Reduction Act, where they hired a bunch of, obviously that went to reduce inflation. They hired a bunch of IRS officers because that's gonna reduce. So that's gonna be the general idea of it. Now then you can get into more details on what type of 1099. Usually they're gonna be a contractor. So the two main forms, I'm just on irs.gov here, are going to be it used to be that they were using the 1099 miscellaneous, but more likely these days you might be using the 1099 NEC, non-employee compensation. So you want to identify what you're making the payment for. A lot of times they're going to be a contractor, a general contractor, someone that you can imagine might be an employee in some situations, except they're not an employee because they have their own tools and they do their own job, and you're assigning them the job and not treating them like an employee, which is something that you want to make sure that you identify and can do in the event of an audit. Because remember, the IRS is going to come from the perspective of they are an employee, and therefore it's your responsibility to act as our tax collector, collecting withholdings on their behalf if they were an employee. And we want to be able to say, no, let me look at all the things that the IRS says have to be in place in order for them not to be an employee if I'm going to treat them not as an employee, so that in the event of an audit, I can say, here's the evidence showing that they're not an employee and they're just a contractor, man. So I've already ratted them out with their ID number and where they live. So you go after them yourself. I'm not doing it. You go after them if you want to collect their money. I just made a deal so I can get my work done. Their taxes are their business. Their taxes are their business. It's between you and them, A and B, and I'm going to see my way out. Dang it. I'm going to see my way out. Tell me what to do. I don't like being told what to do, man. Even before I was born, I was sneaking out without telling my mom. That's how crazy I am. I don't follow these rules Anyway, that's how it goes.